Do you have private student loans or just getting tired of the student loan madness? Well, maybe refinancing is right for you. Listen up to hear who is a good candidate for refinancing and how to approach it. Hello, and welcome to the Wealth Minded MD podcast with your money best friends. I'm Dr. Brittany Helford.
And I'm Dr. Alicia Taylor.
And of course, we're here to help you build wealth and make good money decisions so you can create the life you desire with more control over your time. Alicia, can we talk about one of the most important money moves we've made as doctors? And I don't know about you, but for me, when I think about this, it's actually insurance. Yes, I know it's not sexy, but it is absolutely essential, especially disability insurance.
Facts. I got mine right after med school, before residency even started. And let me tell you, Prati Botto at PKA Insurance Group made the whole process so smooth. He actually cared, broke down everything, explained the fine print, and got me the best policy for the best price.
And what I love is that he treats everyone like that, residents, attendings, even docs on visas. He literally got you. He's super responsive, super knowledgeable. And if there's a better deal out there, he will tell you.
Oh, and if you're healthy, you could get approved for up to 10 million in life insurance. So not just disability insurance in only 5 minutes. No labs, no hassle.
So if you're serious about protecting your income and your family, call 1-800-258-1018.
Or email pradeep at pkainsurance.com. All right, Brittany, I know that I think the last time that we spoke, you were mentioning doing some sort of talk, but I forget to whom and when that talk was supposed to take place. So please enlighten me.
Yes, Leisha. It's so funny because I think both you and I really enjoy talking in front of audiences, educating people, giving presentations. Although I enjoy it, I can say that this season of having four presentations within like 3 weeks is challenging me. So your girl is a little tired because I have, for some reason, decided to modify the talks that I give for each presentation. So that means that I need to do three new presentations. So right now I am working on this presentation for the Latino Medical Student Association. And I love talking to medical students. There also will be a lot of residents in the building. So that's where I'm going. It's in Chicago again. So I love returning to Chicago. Also, it's like really good weather. That's where I went to medical school. And I am teaching them about three keys to financial wellness. And one of those keys is dealing with your debt. So I have incorporated a lot of student loan information into my talk. Honestly, it's a lot. That could be a whole talk in itself. And I decided to include some other things in it. I don't know why, but that's what I did.
All right. I think it's an important topic because a lot of medical students have increasing amounts of debt. We know that there's rising costs of tuition, which has, of course, caused a lot of students to need to take out even more student loans than maybe they had in the past. And I think some of the studies have shown that minorities tend to take out a little bit more student loan debt than non minorities. I definitely commend you for this topic. I know it's probably something that they need to hear. It's so interesting. I actually got an email yesterday, I think it was, that some of the medical students at my institution actually admitted to having some challenges with debt and financial security while they were in medical school. And so actually it prompted the faculty to send out an email, of which I was copied on, about, having a meeting to sort of brainstorm ways that we could make life a little bit better for the students, given this current
Mhm.
economic climate and the rising cost of tuition, and how we can do so in a way that still allows our institution to pay for expenses, but also ease the burden on those who are in attendance. And so I think this is a national problem. I want to commend you for giving this talk. You have to give me some pointers on how you're able to do the talk and do so in an engaging way. Because I find that sometimes we think topics are so important because like we're jazzed up about them, but then you can look out in the audience and people are like, yeah, I'm bored. So give me some pointers on how you've been able to like keep the audience engaged as you get into the details of student loan management.
Yeah, thank you for asking. I really pride myself on the structure of my presentations. It could be a little bit of a headbanger for residents when they're working with me. I'm like, we got to change these slides. the structure is just as important as the topic. And I just want to take a step back to say, I also commend your institution for taking that information, like the data from that survey, and then taking action on it. Because I think oftentimes we collect data and then we do nothing about it. And clearly, this is impacting the medical students then. And if they have this financial insecurity right now, when they go to be an underpaid resident, they're also going to experience that same level of stress and financial insecurity. So I'm really happy to hear that. And you please keep us updated on how those talks goes because it one affords us the opportunity to be transparent about what people are actually experiencing and then also be able to monitor what other institutions are doing about the problem. And hopefully we can increase that impact by increasing the awareness. So that's fantastic. So I have a virtual assistant who helps me to design the presentations and basically I just build them out like on a Google Doc or whatever. And one of the things that I've learned is that there's a lot of overlap and integration of personal finance topics on various topics. So let me explain a little bit more about what I mean. So when I'm talking about taxes, right, I could be explaining, okay, invest in a 401k because it helps to reduce your adjustable gross income. But then that same reduction of adjustable gross income also plays into the calculation of what your income driven repayment amount will be. So instead of doing like different presentations on different slide decks, I just said, okay, I'm going to have a single slide deck for all of my presentations. That way I can copy and paste one slide from the other slide deck and I don't have to rework the colors or the patterns or anything else. Like let's make this simple. So by doing that there's also a theme to my presentation. So there are just various versions is 3 keys to financial wellness or 3 keys to retiring well or 3 keys to this what they didn't teach us in medical school. And so this one is the medical student version of that. I had a hospitalist version of it, I have a fellows version of it. And so I basically just have multiple versions. And with that talk, I break it up. I give pictures of my family. I ask questions, audience response. Let's turn to your neighbor, okay? And let's practice this activity. Also, with this one, I will print out a little bit of a worksheet for the medical students to do as they are engaging with the presentations, kind of some fill in the blanks. So that's how I keep the audience engaged by showing them a little bit of myself. So I have pictures of my kids, pictures of my family. I share a story about when I was in medical school and I have like this funny picture of me. I'm in my little short white coat and I have like this rain bonnet on and I'm taking this picture with my Blackberry in the mirror. And so I'm like, I don't know why I have this rain bonnet. Like who still has a Blackberry, and it kind of breaks it up and makes people laugh because I'm making fun of myself. So I do that kind of throughout the presentation as well.
All right. I'm hearing a lot of good tips. I'm hearing you're adding in some humor, you're adding in a personal element, you're adding in a little audience engagement, you're having them actively participate by filling out worksheets. So I think that all this is very, very helpful. I'm actually taking that to heart. I just hired a virtual assistant to help with some of the presentations, which, by the way, took me a long time to actually make that leap because I think I'm good at creating presentations. I usually do it in PowerPoint, so I'm really good with animations and things like that, having things go in and off the slides at certain points. But I've realized it takes a lot of time. And I'm like, all right, I can have this top notch animated presentation. I can hire a virtual assistant to do a lot of this work for me and free up
Mhm.
some more of my time. And so I've recently made that leap. We'll see how that goes. I love your idea about having a master slide deck. And so I might have to adopt that. I actually started it because I was like, man, every single time I have a topic, I'm doing a new slide deck with a different theme of colors and stuff like that. And then, as you mentioned, the talk that you give to a group of medical students is going to be a little different than what you might give to a group of trainees or residents, which might be different than a talk that you might give to earlier mid career doctors. And so you might need to have different versions. So I think all this is really helpful. I was actually reading a different book this morning. One of the sections of the book was talking about the importance of storytelling and
Mhm.
how it's not the person with the best information that wins or gets the awards or gets the accolades or sells the most books or has the most riveting presentation. It's the person who can tell the story the best.
Mhm.
People are oftentimes not moved by facts, but they are moved by stories. And people don't remember books, they remember sentences in a book that really resonated with them. And
Mhm.
so I'm taking that information to heart and really trying to revamp, okay, how can I add in a story? I've been trying to do this a lot lately. Whenever I'm explaining something, I'll say, this reminds me of this story, or I remember this, or whatever, because I think it will help people remember what I say a little bit more. And so your response just prompted me of like, oh yeah, don't forget to add in some storytelling. Don't forget to add in some little bits to make the presentation more interesting. So you'll have to let me know how successful you are. And hopefully, it can increase my own success as well.
I'm sure it will. I didn't spend too much time presenting, and then there was a competition when I was a hospitalist, and I won that competition. It really boosted my confidence. So I love presenting and, like you, crafting the talks. But, Leisha, I think this is just a word for all of us. There are things that we must do, things that we can do, and things that others can do for us. And so, I think there's a lot of overlap in things that we can do and things that other people can do for us. If you want to do the animations and all the things, if it gives you joy, then keep doing them. But if you're like, okay, this is just taking my time and I don't really need to, then yeah, let's outsource that. And done is better than perfect. So take a deep breath because they're not going to do it the exact same way that you will. Trust and believe, but it will be done. So I'm excited for you to have that moment of delegation, that moment of release, and that moment of rest because it's going to offload some tasks so that it makes space for other tasks for you or just doing nothing, which is also very, very productive.
As physicians, one of the most important things that we can do is make sure that we secure our income because a lot of our financial plans are contingent on our high doctor income. One of the things that you will need to do is make sure that you get long term disability insurance.
Now, Pradeep and his team at PKA Insurance Group have a reputation for putting people over profits and always doing what's best. Do not hesitate to email PKA Insurance and his team today.
They will help you get the insurance you need with the service you deserve.
All right. As we go into this financial focus, one of the things that I realized when I was structuring the Latino Medical Student Association talk is that I was talking a lot about federal student loans and not so much about private student loans. And what I have a tendency to overlook is that some people don't have access to federal student loans. Like a lot of our international medical student graduates, like they just couldn't, the government wouldn't give them a loan. So we have to understand that for international students, or maybe for some students who there wasn't enough to cover their tuition and they had to take out additional loans, which might have been private loans, then this is a huge burden for many of them. And when I talk about student loans and all the student loan changes, sometimes I forget that not everybody has federal student loans. And how can I still help the other people, like everyone else, or the other loans that are not federal?
That's a really good point, and I think that I am guilty of doing the same thing, where a lot of the advice that I give centers around folks with federal student loans because I'm like, well, the vast majority of people have federal student loans, not as many people have private loans. And although that may be true, there still is probably a large segment that has at least some private loans, whether it's private student loans, private personal loans that they took out to help finance some of the costs of school or living expenses or whatever. And so you're right. A lot of people may have federal and private student loans. And I think now with the passage of the One Big Beautiful Bill, that's going to become even more common because now there's these caps on how much federal student loans you can get, right? I believe it's $50,000 total for all of undergrad, which is even when I was an undergrad, that was not nearly enough. I don't even think that covered a year of tuition where I went, which was Duke University. And so even for folks who maybe don't choose as expensive of a school, I think a lot of people are going to need to supplement their federal student loans with private loans, especially those who go to medical school. I think now the cap for medical school is going to be $200,000 total. And a lot of medical schools cost substantially more than that for 4 years of tuition and living expenses. And so you're right. Not only is there a segment of the population who already has private loans, but I think the percentage of people who have private loans is going to increase over time.
I hope not, but unless there is recalculation, recalibration of tuition costs, this is the only path forward because a lot of people otherwise wouldn't afford to go to school. So, this is a topic that we're going to talk about today. And Leisha, I recall that when I brought this up and I was crafting our teaser, you're like, well, hold on there, Wody. Because she didn't quite say that, people.
You're so funny.
And she's like, okay, this is triggering me a bit. And what she said is because sometimes when we go to these conferences, financial professionals, you have sponsors who talk about, oh, refinance, and all of the beauty of refinancing your student loans. But that's not the case for everyone. So please tell us a little bit more about why You are being triggered, and let's have a conversation about when not to refinance.
All right. Yeah, you're right. I mean, I didn't quite say it how you mentioned it. I acknowledge, like, okay, maybe it's just a me thing. Maybe I'm just triggered, you know? But you're right. It's because I would oftentimes go to conferences, even as a medical student or a resident. And a lot of the conferences would have sponsors. And it seems to be, or at least my personal experience, was that a lot of the sponsors tend to be financial companies or insurance companies because those are the types of companies that have more dollars that they can use to sponsor conferences. And in exchange for their dollars and their sponsorship, these conferences would allow certain people to host talks. And so it might be like a free lunch talk, or it might be like a free financial advice session, right? And you're thinking to yourself as a medical student, oh, wow, I get to hear this financial expert talk. Maybe you're thinking to yourself, I don't know as much about finance as I need to, or I don't know as much about student loans as I need to. So I'm going to listen to this talk and get some advice during my time at this conference. And my experience was that most of the times, these talks were given by experts who had ulterior motives and they had biases. If it was some person that was speaking from a student loan refinancing company, of course they would talk about the beauties of refinancing. But I found that they would oftentimes leave out the downsides of refinancing. Or if it was a talk given by an insurance agent, they would talk about how you needed to get this kind of insurance or that kind of insurance, but they wouldn't necessarily talk about the downsides or the other alternatives that might be a viable option. Similarly, if it was a financial advisor giving a talk, right? It seemed like they really wanted to gain more clients and they wanted to have doctors as their clients and manage their assets. And they didn't really talk about the fees and how much money they would be charging and their investment philosophy. As someone such as myself who had a background in finance, I knew some of those downsides. And it really used to anger me that we would have these quote unquote experts that were not properly vetted that would be giving biased advice, in my opinion. And this really hit home for me because it really affected someone in my family. So, my sister in law is also a physician, and she had a substantial amount of student loans that were all federal. And she told me how she went to this conference. It was put on by an organization that she was really active in. There was this expert that was talking about things to do with money. This expert was a really good speaker and really engaging, and she just trusted him. And one of the things that he recommended was that she refinance her student loans. They talked about how you could get a lower interest rate and how you would pay less over time. And she thought to herself, well, that seems great. I want to get a lower interest rate and pay less over time. And so she refinanced her loans, multiple six figures of student loans she refinanced. And what she later found out was that because she refinanced her loans, she was no longer eligible for any of the student loan forgiveness programs. And she would have been able to have her student loans forgiven through the public service loan forgiveness program or even several other federal student loan programs. But because she refinanced, she was no longer eligible. And she talks about how that was such a big decision for her because now she's got to pay back over $300,000 of student loans when she could have gotten all of that forgiven. And she is married to my brother and they have a couple of kids. And this is really a big decision for them because they were deciding, do we want a third kid? And then it was like, well, can we afford a third kid? Can we afford another $2,000 a month in daycare costs? They're trying to buy a home. Can we afford this big home? We've got this huge debt payment to repay. So it just really affected the quality of life that she's able to have and the decisions, big decisions, family expansion, buying a home for her. And so it just really triggered me. And I remember her saying, wow, I really regret that. I wish I had done a better job. And so I've kind of made it part of my mission to sort of make sure that people are aware of the pros and cons of each decision and aren't swayed by like one thing that they heard at one conference by some expert.
Yeah. Well, thank you for your transparency and thank you for sharing that story. And I'm sorry that your sister in law had that moment in which she's like, okay, I've been swindled. You told me all the perks, but once you take the makeup off, like, this is a monster.
What a vivid story. I'm like, wow, okay. I mean, I got it. That hit home for me.
I'm all jokes today, people. I am sorry. I don't know. Somebody spiked my coffee. In all seriousness, Alicia, I think that that is a great point for us to discuss because when you refinance your student loans, you are losing a lot of the safety and the security that federal student loans affords. And you all know that refinancing my student loans was a big part of my financial freedom journey. I'm not completely free yet, but it's one stage in, one phase is done. And I really appreciate the opportunity to refinance. But to your point, refinancing is not for everyone. And when you refinance, you do not have access to forgiveness anymore. And I understood that. I no longer wanted PSLF, public service loan forgiveness. I no longer wanted income driven repayment forgiveness, and that this is something that I'm going to set and I'm going to commit to. But you have to understand that decision. When you are considering whether refinancing is or is not for you, then you want to ensure that you are making the right decision for you. You want to ensure that you do not plan for forgiveness. And once you make that decision, say, okay, I actually just want to pay these student loans off, then sit with it for about a month before you take any action. Okay, what does this look like? What would my payments potentially be? What are some of the interest rates, etc.? And see how that lands for you. Anytime you're receiving advice from anyone, even us on this podcast, you always want to do your due diligence and your own research to understand how it applies to your personal situation. And you also want to understand that when you refinance, you will not have the luxury of missing payments. You will not have the luxury of forbearance for an extended period of time. When you have private student loans, my understanding is like that forbearance period is much shorter. It's like 3 months. So, yeah, you have a little bit of time to get your act together, but not much. So, you want to understand really your financial situation and ensure stability of that financial situation. Alicia, I think your description of what your sister in law was experiencing and how that is impacting her life really ties into the strategy that I want your take on that I heard on another podcast. It was very interesting to me. So we're going to dive into that. So keep listening, people. But Alicia, I just want to pause for a second. Do you have anything else to add about when not to refinance?
Yeah, I always tell my friends that even if you don't currently qualify for any federal student loan forgiveness programs that you can think of, maybe still wait a year or so before making such a binding decision. And the reason why I say that for a lot of my friends is because one, I find that people are not always aware of what student loan forgiveness programs they may be eligible for. People have heard of the common one, public service loan forgiveness, but they may not be aware of other federal loan forgiveness programs. And number two is that people change jobs frequently. Some of my friends who finished their training said, I want to work in private practice. And for some of them, it was the right decision and they're very, very happy with their current setup. But others are maybe not as happy and they're thinking about switching jobs. I think the statistics show that up to 50% of doctors leave their first job out of training within the first 2 years. And so even if you are at a job right now that maybe does not qualify for a program like public service loan forgiveness, that doesn't mean that you may not switch jobs in the future that does qualify. And so because it's such a binding decision, I always tell people, let's make absolutely certain that this is the decision that you want to make before you do it.
That's a great point. You want to ensure that, you have some life stability and can guarantee that income to make those payments before you do the dive into the deep end. All right. So you might be asking yourself, okay, so those are some of the dangers that I might lose the security. I may not have access to forgiveness programs, but why are they talking about this in the first place? Why did Brittany refinance her student loans? And one of the reasons why, and Alicia, you mentioned this, is that you can lower your interest rate substantially. So federal student loan rates can approach like 7 to 9%. When I had my student loans, they were at 6.8%. And what I did was I refinanced to a 5-year term. So I had to pay it back over 5 years and I was able to lower my interest rate to 3.5%. Now I set it up on automatic payment and they gave me an additional reduction of 0.25%. So my therefore effective interest rate became 3.25%, substantially lower than the 6.8%. So with that lower interest rate, most of the amount that I was paying goes to the principal. And what it also did, unfortunately, is it raised the amount that I had to pay every month because now I reduced it from even if I was on the 10-year standard repayment plan and I truncated that time frame to now 5 years. So my payment doubled. I was paying almost like $2,500 a month based upon that 5-year term. But for me, I didn't refinance right as I transitioned to attending hood. I made sure that my job was good. I worked for a couple of months at the job, made sure that I enjoyed it and could really understand my cash flow and how much money I had left over to be able to afford that payment.
That's really interesting, and if I remember correctly, please correct me if I'm wrong, though, because I wanna make sure I get this right. Your total amount that you refinanced was, like, 140,000, is that right?
So it was 135,000 at the time of refinance, but then I paid it back over 3 years and it had accumulated like 3,000 plus in interest. So I
Okay.
paid back a total of 138, so around 40. Yeah, or around 140.
Okay, okay. The reason why I'm mentioning this is because my experience is that most people have more than double that amount. Because when you talk about your payments being $2,500 a month, I mean, that's what my payment is stipulated to be under an income driven repayment plan, somewhere around there, $2,000 to $3,000 a month. And so for me, I'm like, if I could pay $2,000 to $3,000 a month for 5 years and have my loans completely done, oh my God, I would have done that in a heartbeat. The challenge is that people have double that. So imagine if you had $300,000 of student loans, then your payment would be like 5 grand a month. And all of a sudden that becomes way harder, let's say, to fit into a budget if you get a $5,000 student loan payment, right? Then you're making the decision not, okay, I need to buy less things, but it's like, do I even contribute to retirement accounts? Am I even able to save money? Am I able to live in a safe area with like a decent amount of space? Can I drive a reliable car? Those are the decisions that you're making. Obviously, it may change based on your specialty and how much money that you are bringing in per year. Most people tend to make more over time. And so it may change a little bit. Whether or not you are partnered and your partner works also may change the equation a bit. But I just know for a lot of folks, like that is the reason why they haven't refinanced is because, wait, if I refinance and I have to pay down $300,000 of student loan debt, at least I can't afford $5,000 a month just on student loans. I mean, I have friends now who have never paid on their student loans because they've been stuck in save forbearance and all this stuff, and they're living their lives. And I was like, don't forget that you're going to have like a $2,000 or $3,000 student loan payment. And they're like, wait, what? And I'm like, please make sure you're factoring that in. They're going to have a little bit of a shock when it comes to mine. But my point was like, all of us, if we had $2,500 that we had to pay for 5 years, I think that would be a little bit more feasible. But $5,000 or $6,000 per month for 5 or 6 years is a lot. So then you've got to extend the timeline to make it more feasible. And then you're paying on your loans for 10 years. So then it's like, all right, now let's really do this analysis because public service loan forgiveness is in and of itself only 10 years. So in residency for a lot of folks counts. Maybe you already have 3, 4, 5 years in the program anyway from your training year. So it's like, well, maybe it doesn't make sense to refinance if you're someone who has federal loans and has that decision. Obviously, if you're someone who has private loans, that's a very different conversation. But just to play devil's advocate a little bit, I think I'm hearing now is that you were very blessed and highly favored, okay, because you didn't have as much student loans as it seems like a lot of folks have now. I think this study showed that the average person graduating from medical school has over $200,000 in medical student loan debt alone. And that when you add
Mhm.
in any debt that they might have from grad school or undergrad, that number can rise to over $230,000, $250,000. Different for different ethnicities, different for people in certain socioeconomic classes and things like that. I think one of the challenges is just the amount of student loan debt you have.
Yeah, Alicia, you raise a good point that this has to be for the right person and for the right loans. Refinancing is not an option for everyone. And we're going to talk about the timeline and all of that. And to your point, my debt to income ratio was maybe around 0.75. It was pretty low. When you think about your debt to income ratio, basically that is your monthly amount that is going towards debt divided by your monthly gross income. My debt was 130 grand and 38, 40 grand. And then my income was 100, like 95 grand. So my debt to income ratio was pretty low. So this is for someone who has a lower debt to income ratio. Your debt to income ratio is less than one would be ideal. I know some people have said, like, okay, between like 1 and 1.5, that is a good wiggle room. But again, you want to make sure that this is going to work for you. Another thing to think about, Leisha, and this kind of goes into play about what is the timeline. So you mentioned you could enroll in PSLF, and that timeline is typically 110 years, 120 qualifying payments at an eligible employer, and your residency counts. Okay. So, yeah, that makes a lot of sense. And when you're in residency, your interest rate may not be the 7 to 9% because depending on the plan that you're enrolled in, depending on the timeline, you might have some interest subsidy, which means that any of the remaining interest that is not covered by your monthly payment, that amount is being forgiven or subsidized and being paid off by the federal government. So that effectively lowers your interest rate that you're paying on these student loans. So there is a lot lot of calculations that go into this decision of whether you should refinance or not. But if you are someone like me who is like, okay, you know what? PSLF sounds good, but the government is acting a little crazy now. And at least when I refinanced my student loans, I think the percentage of people who actually got forgiveness under PSLF was like 1% or 10%. And I'm like, okay, you know what? I can bet on myself, and my debt to income ratio is pretty low. I have a stable job and I've understood my cash flow. So I know that I can pay down these loans aggressively, and I cannot rely on the government based upon the data that is being presented to me. Also don't want to have the headache of having to recertify my employer and do this whole thing every year. Also, it was a huge headache because I was married. So it's like, do we file our taxes separately? Do we file our taxes jointly? So all of these things came into play with my decision. And for me, refinancing was the easiest and it made the most financial sense.
Yeah, I hear you. I hear you. And I actually have a couple of friends that are in that boat where they were very fortunate, like you, where they maybe only have less than $100,000 in student loan debt anyway. I give them a very similar rule that you mentioned. Usually, my rule of thumb is if your debt to income ratio is around one, public service loan forgiveness may not be your best bet. And if it's less than one, you may oftentimes be better just paying it off yourself. And it seems like that was your situation where it was like, all right, you did a 3-year residency. So you would have needed 7 more years on the program, but your debt to income ratio was less than one. So it's like, okay, actually, I might just pay this off myself faster than I could get it forgiven. And I have more control and I'm less reliant on other people and less reliant on the federal government. So I think that was a great decision for you, actually. And I know some friends who are fortunate enough to be in a very similar position where either their debt is very low, less than $100,000 or something like that, or their income is very high. Maybe they make $800,000 a year or something crazy. Two great positions I would love to be in, by the way. But, that unfortunately is not my personal story. And so for those people who are in that position, your income is really high, or your debt is very low, or maybe you have private loans. So federal loan forgiveness programs are just not an option for you. Can you talk, Brittany, about some of the things we should keep in mind or some of the things that those people should keep in mind as they consider refinancing their student loans?
So the first thing to really think about, and this is in your sister-in-law's case, is I actually didn't think about it like this. Like a refinance is a refinance. I refinanced my home recently. I'm gonna do it again. Interest rates keep on dropping. And so when you think about refinancing your student loans, I think one of the myths that people have is that it's a set it and forget it. Once it's done, it's done. You're committed to paying that for the duration of your term. But if you think about refinance just as any other refinance, that means that you can do it again if your life changes. So in your sister-in-law's case, now she's like, okay, I want to have a kid. I want to purchase a home, but this student loan payment is too much. She could refinance for a longer term to lower the required payment and then make additional payments on top of that. But at least it affords some flexibility to allow for life to happen. So that's one of the things that I just want to empower someone. If you have private student loans or if you refinanced in the past, also know that you can refinance again. If the interest rates drop, then you can refinance again to lower those payments. But in order to do that, you have to ensure that you are in a good personal standing. So what do I mean by that? You want to make sure that one, you understand your cash flow. How much of a payment can you afford? And even taking a step back, the first step is understanding your goals. So at the time of refinancing, maybe your sister-in-law had no children. I don't know if she was married at the time. Maybe she did or did not want a house, but really sitting with yourself. Okay, this is me today, but what do I want in 3 years? What do I want in 5 years? What do I want in 10 years? And really writing down those goals. Because if you want to add a house into the mix, if you want to add children into the mix, if you want to do other creative things like get your own business, those things are going to be imperative for your refinance strategy. So understanding what your goals are, and then you can start to conceptualize, what does my cash flow look like right now? What will it look like in 3 years if I have a child or I get married? Like, will it increase because now my partner is also matching my income? They make more than me, or do they make less than me? Will my income cash flow effectively decrease because now there's another person I'm going to be supporting them, etc. What does it look like when you want to purchase a home? What type of home do you want to purchase? What type of business do you want to purchase, etc. So these are all things that I want you to conceptualize, not only just the goals and the timeline for those goals, but also how those goals are going to modify your cash flow. And then from there, you have to understand, okay, what is your candidacy for refinance? Are you a good candidate or can you become a better candidate? Okay. So the first thing is your credit score. I know that, Leisha, as you mentioned, when we're in medical school, a lot of us feel this burden of having financial insecurity. We're plagued with taking on a lot of debt, but then not having enough income. And if we're in a high cost of living income, then maybe we're carrying that debt on a credit card or a personal loan, et cetera. And that impacts our credit scores. So you want to ensure that your credit score is as high as it can be. Most lenders require like at least a 650 to a 680, but actually that's pretty low, and you're not going to be able to get the best interest rate with those lower credit scores. So I would say at least a 700 for a good credit score in order to pursue refinancing. Remember, the higher the score, the lower the rate. Then you want to ensure that you have the stable income with your employer. Leisha, like you said, some people transition jobs. You maybe not know. So don't do it, as soon as you transition into attendinghood. You want to make sure that you kind of fill it out for a little bit of time. If you maybe have a higher debt to income ratio and you still want to pursue refinancing, you may have to get a cosigner. So this came into play personally for us when my husband was still in residency. He had this loan. I think it might have been a Parent Plus loan, and it was at 10%. I was like, what? It's at 10%? I'm paying 3.5%. You're paying 10%? We need to refinance this. But because my husband was a resident physician at that time, he required a cosigner for his application in order to get that approved through the new lender. So if you are going to look for a cosigner, make sure it's someone who's responsible. Make sure you can still afford to pay it off so that you don't put that burden upon them. And also just build up this level of trust of, okay, I need the cosigner now, but maybe later I can refinance the loan again when I'm in a better situation so that I can remove this cosigner and the liability and risk that I'm putting them in. So those are some of the beginning things that I would say to start to think about.
Yeah, you're totally right. And unfortunately, this really disadvantages those that come from maybe lower socioeconomic backgrounds, where maybe you don't come from a family of wealth, or maybe your family struggled a little bit more financially than the average family. And maybe you don't know of a reliable cosigner. So then the onus is going to be on you to ensure that you have a good enough credit score, and realizing that you may have to wait a little bit, but not now is not a not ever. I run into some people who unfortunately have really high student loan burdens. Like we're talking about over $500,000 worth. And I know some people in that camp who actually wanted to refinance, but were denied. The refinance company was like, oh no, we're not taking on that much debt. Pay it down a little bit. Show us that you can pay some of that down before we just take on all that money for you. You may have to wait a little bit, and that's totally fine. But again, not now is not a not ever. And so those are some things I think to keep in mind of, like, you may not be able to do it right now. You may require a cosigner similar to what you said. I love your point about considering a longer term and just using that to be able to create more flexibility. You mentioned that you chose a 5-year term, and I actually think that for most people, that's probably the best bet, just to kind of get it gone. But I know some people who did choose longer terms. Maybe they chose 10-year terms or 15 or 20-year terms, and they did so similarly to when they bought a home. Maybe they chose a 30-year mortgage, right? You wanted that flexibility of the low payments. And then when you come into some extra money, you get a bonus, then you can make extra payments at your own discretion. One of the things I would caution people, though, is to not necessarily rely on the super long loan term. I know a lot of older docs who got these 20-year loan terms and they're still paying it off to this day. They're near the brink of retirement and still have student loans. And so just knowing yourself, some people that flexibility is really, really great. Other people that flexibility can be a crutch, and that becomes like their minimum payment, and that becomes what they pay each month, and it's out of sight, out of mind. And so just really recognizing what kind of person are you? What kind of financial situation are you in? As you mentioned, Brittany, taking a look at your debt to income ratio and really seeing what might benefit you most, and realizing that maybe you have to wait a little bit, but then maybe you can change your mind or change your stance on things in the future.
Yeah, yeah. One of the things that I love to tell people is like, if you're still alive, then that means there are opportunities available to you. So just because you make one decision doesn't mean that that's going to pigeonhole you, putting you into the repayment prison. It is an opportunity for you to leverage now. And as other opportunities present, you might want to change directions. And Leisha, as I think about this in your situation of home ownership and then also kids, there are also opportunities for physicians to maybe open up their own private practice, right? And so if they're doing that, they might need a loan from the bank. And the loan's like, well, you refinance your student loans for this 5-year term, and now your debt to income ratio is very high. I need that to be lowered. And so sometimes people might take an opportunity to lower their debt to income ratio so they can get access to other debts that are going to help them to meet their life's goals, whether that's opening up a private practice or purchasing their first home. And once you make that transition, amortization, right? You decrease your debt to income ratio because now you've refinanced for a longer term. You can always refinance again for a shorter term so that most of that money goes towards your principal. Because when you refinance, as you mentioned, Leisha, for these longer terms, you don't want that to be a crutch. Because if you think about the amortization calendar, when you have a longer term, that means most of those beginning payments go towards interest and not towards the principal. So you don't want to stay there, but you can leverage it if you need it for another opportunity. So again, this is all about building in the strategy. This is all about knowing thyself and also understanding what your life goals are and what your financial goals are and making sure that you can find parity to achieve both.
All right, Brittany. So let's say somebody is listening to us and they've got private loans that they need to refinance, or they know that they're no longer eligible for federal student loan forgiveness programs. And they're like, you know what? Maybe they have a low amount of student loans. Maybe they have a super high income. Maybe they have a combination of both. And they've said, you know what? I don't want to rely on the government anymore. I really want to take matters into my own hands and I want to pay off my loans myself. Once they've decided they are going to pay off their loans themselves, now they're thinking about, should I refinance? Should I stay federal? You mentioned a lot of the benefits of refinancing, mainly because you can get a lower interest rate and pay less overall if you're already committed to paying off your loans. What if somebody's like, all right, I think I want to at least consider the options. I'm not sure yet, but I want to consider the options. What steps would you tell them to go through in order to find the best option? Like, how do you go about refinancing your student loans?
Yeah. One of the things that I like to use, and they're not sponsoring this podcast, but maybe we should reach out. I like to use Credible's website. So Credible, basically, you can put in all of your information, your loan information, your income, a little bit about yourself, and it will tell you what the interest rates are at various banks for various terms. And that's where I kind of started just to get an idea because they're not going to pull your credit. And so therefore it's not going to be a hard inquiry and decrease your credit score. This will just give you information. And then you could see what the interest rates are. I saw interest rates in like the four and the fives, which was crazy to me, just given how much I'm paying for our current mortgage, which our interest rate is like 6 to 7. So I was actually quite shocked. And then after you identify, okay, these are some of the potential banks that would at least offer a student loan refinance to me, then you want to do your research on that specific institution. And I think that this part can be the most valuable because I've refinanced our student loans with various companies and had various experiences, some of which I do not recommend. So you want to understand what is their customer service. You want to understand, do they actually sell your loan just like a mortgage? Because if you refinance with them, they're great, they're fantastic, but then they sell it to a bank that you don't choose, then now you got to deal with that bank, which could become a headache. You also want to understand the type of rate that you have. Is it going to be a fixed rate versus a variable rate? I've done both. With a variable rate, sometimes you can have a lower payment, but again, that's variable. So it can increase after a certain period of time, which I don't like uncertainty. So I didn't really like having a variable rate. It was hard for me to budget around and it caused me anxiety that every month this rate is recalculating or every 6 months this rate is recalculating. And what if it balloons? How am I going to be able to afford this? So my recommendation would be to go with a fixed rate. So after you kind of look at what banks and what they offer, you do research to see which banks you like and you kind of decide, okay, do I want to do fixed or variable? The next thing that I would do is to look to see, and you can do like a quick Google search to see if there are any cashback bonuses because I'm all about free money. And a lot of these companies or their partners might offer like $500, $300, even $1,000 of a cashback bonus. And that's money that you can use for a vacation or you can use to pay down your student debt. Now, after you've done that, now is the time to go to the company, actually submit the applications. My recommendation is try to submit applications to at least 3 to 5 companies within the same 30-day period. So that way you don't have multiple hard inquiries on your credit and kind of all counts as one. After you get information back on what your interest rate will be, then you can negotiate between the banks about the terms, the payment options, the interest, and make a final decision based upon who is offering what.
All right, that's really great advice. I love how you mentioned not just going with one company that you may have heard of, but going into maybe an independent site and getting quotes from different companies and submitting multiple different applications. Because I think if I'm understanding this correctly, submitting the application is not a binding decision of like, I'm going to go with this company. It just gives you a chance to really understand what your specific rate might be, what the loan terms are that are available to you, and then you can choose which one you like. I am likening this to like purchasing disability insurance, going through an independent broker, or purchasing life insurance and going through an independent broker where you go through this broker, they get you quotes from various companies and you choose the plan or the company that you want to go with. I have a couple of questions for you. Brittany, in your personal opinion, is this something that trainees should be thinking about? And by trainees, I mean a resident or a fellow. Or in your opinion, is this more limited to attendings? Like, who do you think should even consider refinancing their loans?
Yeah, I like to relegate this to attendings. However, let me say this with a caveat. That's typically for those who have federal student loans. If you have federal student loans, it's not worth the risk because you just have too many things going on during residency and fellowship, and your debt to income ratio is likely a lot higher because you're not making any money. I'm sorry. But if you are married, right, and your spouse is willing to support you and you all understand this is going to be a joint effort, then this could be something that is possible for residents and fellows who have federal loans. Now, if you are a resident or a fellow who has private loans and those private loan interest rates are 10% and there's an opportunity for you to lower that, then yes, let's try to lower it, right? Because now you're decreasing your payments and you can show that you have a stable income during residency, etc. You just want to ensure that you can make it work and that there's not going to be any additional threats. Now, when I say additional threats, one of the biggest threats to our income that Alicia and I talk about all the time and that you mentioned already is disability, right? And so if you are a resident or a fellow and you don't have disability insurance, this might be something that you want to get in order to make sure that you have that income to pay down your student loans if you have private student loans. Now, I think there are probably some hardship terms in your agreement that you might be able to negotiate or at least understand when you refinance with a private student loan borrower or private refinance with a bank, then this will at least offer you some insights on the what ifs. God forbid you face a disability during residency or fellowship, but this is something that I just want you to know in your planning.
Okay, Brittany, before we wrap up this episode, I have another question for you. As we're recording this, it's early September, and I think this episode may not drop until early October. I have heard rumors that the feds might be lowering interest rates. So I guess my question to you is, even if someone is thinking about refinancing, do you think that they should wait until maybe later in the year to see if interest rates are going to continue to drop? Or do you recommend that this is something that they do now, even as the interest rates are maybe a little bit more uncertain?
There's always uncertainty about these interest rates. So, with that, here's what I want to say. Just because you refinance once doesn't mean that you can't refinance again, right? You're not locked in for life. And also, after you listen to this episode, I think that there's still going to be a lot of information gathering that will be necessary in order for you to make a decision. So, do that part first. Monitor the interest rates. You can reach out to some of those banks and say, hey, what are your going interest rates right now, even before you submit an application to kind of understand what the trends are. If interest rates drop later on, if you decide to make the move now because things look good, you can afford the payments, the interest rate is good, then make the move now. And then if interest rates drop in the future, you can always refinance.
All right. All right. Anything else that we should know before we close it out on student loans and refinancing?
Yeah, so the only other thing I would just want to continue to reiterate is if you're a resident or a fellow and you're thinking about this, you want to just understand what are some of the other options for you. Alicia, you mentioned that there's federal forgiveness through PSLF, but then there are other federal forgiveness programs. There might be other student loan offerings through your employer. And I think a lot of times people don't take advantage of those. So do your research as you are considering what are your student loan options. And then if you find that your employer will give you some type of payment, really understanding what that benefit means. Does it have to be private? Could it be federal? Are they paying that money directly to you? Are they paying that money directly to the bank? Incorporate that into your decision because it might help to move you in one direction or the other. And, really understand where you land with your cash flow and what your goals are. So I just want to emphasize that and again, because I think that that really will move you towards one direction or the other. All right, Talisha, how you're spending your money for fun?
As we're recording this, Labor Day was not that long ago. And so I was looking on Rakuten, which is a kind of well-known shopping portal, to see if they had any cash back deals. And I saw that there was like Sephora was, I think, 12% cash back. And I was like, oh, this is a great time. And so I needed some more like skincare products and some more sunscreen and some more foundation. I'm going on this cruise to Greece. And so I was just like, oh, let me make sure that I stock up, make sure I have all my little items in their appropriate travel sizes so that I can look good on my cousin's cruise to Greece. So that's what I was spending my money on is more makeup and skincare products.
Oh, I love that. Give me some tips. I want to know what you bought because I always feel like I could do a little bit more. I'm grateful for what I do. Some days I'm just thankful that I woke up and I brushed my teeth. It's all about consistency. If you will follow us on Instagram, which you should, some of the videos I have my hair and makeup done, and some videos I look like I rolled out of bed, but I'm showing up for you all every single week. So, Alicia, you'll have to let us know like which of the products you purchased that you're really loving and the benefits that you're getting from them.
Oh, that's great. That's great. I will tell you right now, one of the things that I really do love is this brand Tatcha, which I might have mentioned
Mm,
before. It's like a Japanese company. They
mm.
make some of the best skincare products. It was recommended to me by one of my close friends who's also a physician. And she was like, girl, you got to get Tatcha products. I know it's in Sephora, it's a Japanese based company. I really love their products. I saw my friend the other day and I got on her. I was like, girl, how dare you get me hooked on Tatcha products? Because those things are not cheap. And now I'm having to really budget in. And she started laughing. She was like, yeah, they aren't cheap, but they are good. I was like, yeah, that rice wash, ooh, it does something to my skin, just moisturize and everything. But anyway, they make really good skincare products. I love them. One of the things I really like is that they have different lines for different types of skin. So if you have like more oily or combination skin, there's an entire line of products and it's like a different color than if you have like regular to normal skin versus if you have dry skin. So just kind of figure out what kind of skin you have and then you can get the line or the color of products that really fits your skin type. And if you're not sure, one of the other things I really love is they have a lot of sample size or travel size products. And because they're not cheap. And so if you're not sure what your skin is going to react to, or you're not sure like which one you're going to like best, you can just buy the travel size or the very small sizes. And then you get a chance to try it out and see what you like on your skin. I did that and I tried like a couple of different kinds. Like I tried maybe a line for like normal skin. I tried a line for like sensitive skin just to see how my skin would react to different products. And so that is one little gem I'm going to drop on you is Tatcha products.
Love that. I'm going to go to the store. I'm going to this conference. I'm going to be child husband free. So I'm going shopping. I'm going to buy some products in the travel size so that I can get them through TSA and I will let you know how I like them. So for us, we have spent our money on the HBCU Classic. So you mentioned your institution. They said that, oh, the students are struggling. Let's address this problem. And you work at Morehouse, and Morehouse was in the building at the HBCU Classic. So we were there, super excited to cheer for Morehouse, although they lost and they played Johnson C. Smith. Admittedly, I had never heard about before. As I was talking to Brooke, because we're going to this football game, I'm not really big on football. We're taking the kids. It's going to be a little bit of different experience. But I'm like, Brooke, we have to see the halftime show. She's like, Mommy, why? I'm like, the bands are the best. I was super excited to see the bands. And it also took me back to when I was in high school. I was a majorette, a dancer in the band. I remember like sweating it out in the practices and then doing the competitions and like battling it out. And so I got a taste of that. That really took me back. The bands were battling it out and they were chanting and all of the things. So I had a good time. And they even played some songs that we played when I was in the band. So I was like doing my little moves in the stands. I had a really good time.
It sounds like you had a lovely time. It's so interesting. I work for Morehouse School of Medicine, which is slightly different from Morehouse College, which is an all guys school, but I still get a little taste of the HBCU experience. And it's interesting to me because I did my undergrad at a PWI, so predominantly white institution. I did it at Duke University. We're not very good at football. Our band was okay, but also not probably the super jazziest. So I didn't get either to experience. But when I went to medical school, I went to the University of Florida, which did have a really great football team at the time. It's really interesting because I think some people love college football because they like love the competition of football, right? And then other people love college football because they like the halftime show and they like the band. So, it's each its own. I'm glad that you had a great experience and were able to spend your fun money enjoying yourself and reliving some of your high school and college days.
Yeah, yeah, it was great. Alicia, thank you for offering that clarification because my husband did his residency at Morehouse School of Medicine or at Morehouse. And when he graduated from residency, I bought him the colors of Morehouse College. And they are
Oh,
very different. And so it was really funny because as we were driving, you was like, baby, where's that fleece that I bought you? That says Morehouse College. I could use that thing right now.
it's so funny. Yeah, different schools, different colors, different board of governors, all the things are very, very different. Because Morehouse is like an all boys school. And so
Yes,
the School of
yes.
Medicine's co head. Anyway, that's funny. The crazy thing is they're right next to each other. They're all in the same thing. So it's like, I could see how people could get that confused because at most places,
Mhm.
the college or the undergrad and the School of Medicine are like affiliated, but at Morehouse is a little different. But anyway,
Yeah.
I'm glad that you enjoyed yourself nonetheless. Nonetheless.
All right. Well, we thank you for listening. Hopefully, this was helpful to you. And if you're an attending physician and you've paid off your debt, hopefully you can afford this information, this glimmer of hope or guidance to understand some of the dangers to your medical students and your resident physicians who you are working with. These are tools that you can use in every facet of your life. And again, we just want to thank you for listening, and we will see you in the next episode. One of the most important things you can do is ensure you have long term disability insurance. Long term disability insurance secures your income if the unexpected happens and you are unable to work due to medical illness, chronic conditions, or an accident.
Unfortunately, all insurance agents aren't created equal. Some of them are so focused on making a sale that they fail to reveal certain necessary information, tell you about discounts available, or clearly explain the process. Prati Botto and his team at PKA Insurance Group are different. They have a reputation of putting people over profits and always doing what's best.
If you need life insurance or disability insurance, reach out to Pradeep and his team today. They will help you get the insurance you need with the service you deserve.
Hello, everybody. It's me, Brooke. I'm recording a little disclaimer for my mommy, Dr. Brittany Halford, and her friend, Dr. Lisa Taylor. Just so you know, they're not financial advisors, tax professionals, lawyers, or financial planners. Everything you hear is for education and entertainment. It's not strict financial advice, So use your best judgment, chat with a tax professional, and all those other people that you need to talk to. Thanks for tuning in today. Keep cruising on your journey to wealth and wellness. Bye-bye.